Well, we are joined now by Stuart Hoffman. For more on the bubble risk, we're joined by Mr. Hoffman, Chief Economist at PNC Financial Services Group. Stuart, it's great to have you back with us. So what is the Fed to do? It's really stuck between a rock and a hard place here, it seems.
Well, they don't have a lot of choices. I do agree with what Bill Gross said up to a point, that the Fed will leave the Fed funds rate alone. They're not going to change it. But when they're getting ready to, that statement in there about an extended period, I sort of think it's like the extended warranty on a zero funds rate will go. And I think then you'll start to change expectations.
Does the Fed have any tools right now it can use to prevent these asset bubbles that Bill Gross, David Malpass, everyone's warning about right now?
Not unless they're willing to raise the Fed funds rate and withdraw liquidity, but then there's the risks on the other side. If you're worried about bubbles building up, how about certain events that are parts of the economy that could actually implode, like we talk about the unemployment rate. So that's where there's a little bit of a bind here for the Fed, and not just our Fed, but Feds around the world.
And Stuart, you talk about the jobless rate over 10%. As long as it stays at that level, that Fed funds rate's not going anywhere, is it?
Well, traditionally what's happened is the unemployment rate has peaked and started coming down before the Fed funds rate rises from wherever it is.
Well, Bill Gross telling us yesterday, he told our Matt Miller and Carol Masser, I think that unemployment is here to stay.
Well, I think high unemployment is here to stay, not necessarily staying over 10%. In our forecast at PNC, we actually have the unemployment rate coming back down under 10%, still very high.
When?
But move it probably by the middle of next year, and moving down below 10% in the second half of 2010. And that's why I actually think the Fed will raise interest rates probably sometime between the middle and end of next year.
By how much?
I think initially they'll start out with a quarter, but they'll have to be more rapid. They've learned that, one, they're starting so low, and the last time the so-called measured pace under Chairman Greenspan is viewed back as a mistake. So I think initially they'll raise it a quarter, but a half, and over the course of the latter part of 2010 and into 2011, the Fed funds rate will probably get up closer to 2.5% or 3%. That will be some support for the dollar. That'll be pricking a few of those bubbles that might be building at that point.
So what's the likelihood the Fed then breaks precedent? I mean, could unemployment be still at this elevated level when, as you describe it, starts raising rates again?
Yeah, it's not so much the level, it's the direction it's headed in. And the unemployment rate is obviously, by definition, always very high at the tail end of a recession and the beginning of a recovery. So it's not that it'll be high, it'll be, is it moving up or down? And not just for 1 month, but I think it will be moving down in the latter half of next year. And as it moves down, the Fed won't break precedent. They'll actually follow precedent by starting to raise the Fed funds rate.
So when is that going to make itself known to you? Is that going to be monthly jobless growth of 200,000 to 250,000? Is that when we seem to have turned the curve?
You might not be quite that high, but to get the unemployment rate down, you probably need to have at least 150,000 monthly job growth. I think we will get job growth, maybe not starting out that big in the first quarter. By the third and fourth quarter of next year, I expect to have monthly job growth, 150,000 or more a month, bringing the unemployment rate down. And it's not only the unemployment rate, it's the rate of growth of jobs and income.
I want to read you some more Fed speak. We're sure getting a lot of it of late, right? Okay, so the Bank of Dallas President Richard Fisher saying Fed actions carry, quote, unprecedented risk, and therefore the sooner the Fed can return to its traditional policymaking, the better. So what qualifies as traditional policymaking? Is it going to be when it actually turns hawkish, or will we start to see that now in the end of the year than into the new year?
Well, I would interpret Richard Fisher saying traditional, meaning more being able to move the Fed funds rate and not have to rely on so many liquidity measures. And by the end of March, the Fed will be done with the mortgage-backed purchases. They've already finished up their Treasury purchases. So I think he probably means by traditional policy, moving the Fed funds rate up, obviously off of the zero level. But I didn't hear anything in there, and I've also heard Charlie Plosser, the president of the Philly Fed, say it's not the time now. So I still think while they're trying to sound a little warning, right, it's not an imminent warning.
Well, Mr. Fisher also he expressed some concerns about what he said the Fed's action, that these initiatives might compromise our independence and that they will hinder what Lori mentioned, traditional monetary policy. Do you see that?
Well, certainly when you have the Paul bill that was passed, I guess, by the House, it makes a number of us nervous, and certainly the Fed, about the compromising the Fed's independence. I think the president renominating Chairman Bernanke, who will probably have his hearings quite soon, and no doubt we'll get some testy questions as well from the Senate. I still think, though, that having Bernanke in there is really one of the ways to preserve the Fed's inflation, fighting credibility, and some of its independence.
Did you watch the Geithner grilling on Capitol Hill yesterday? What do you think of the Republicans actually asking him to resign?
I guess I saw it more as theater, and I think we'll see a little more of it. We're not asking Chairman Bernanke to resign, but I think he's going to get some tough questioning.
What do you think of the job Geithner's doing at Treasury right now?
I actually think he's doing a very good job, and the bank were able to raise capital. That whole SCAP, as they call it, risk program, I thought was a very good job. You know, he's inherited a lot of situations, and I'm talking about his job as Treasury Secretary, not a year ago when he was New York Fed
sure.
that he got a lot of the flack for. But as Treasury Secretary, I think he's doing a very good job, as is Chairman Bernanke, in very, very difficult circumstances.
All right, so as we close out here, how would you characterize the economy where we are? What indicators will be zeroing in on to figure out where we go from here?
Well, certainly unemployment claims is a lead to where the employment numbers, if we don't get a handoff, a lot of this is federal government and Fed stimulus, public sector. It's football season, so we need a handoff to the private sector. We don't need a fumble and we don't need a loss. I think by the first quarter of next year, if we're not getting private sector job growth, then the economy could be at risk for a throwback.
And who are the Super Bowl teams?
Steelers and somebody else.
Very nicely done. Thank you.
Very good.
Stuart Hoffman,
For you.
thank you so much.
You.
Appreciate it.